Zach Manis, welcome back to Face. How are you, bro?
Good. How are you, Dale? I missed you last time. I had a great
Yeah.
interview with Blake, but is your house okay? How was the hurricane?
Oh, yeah. It was real wet, a little flooding. Interesting for Southern California to have any kind of hurricane hit here. So,
Right,
um,
absolutely.
great to be with you, Zach. You want to share your screen and we could go
Yeah, let
through a
me
few things
let's do
of
it.
what you're looking for here. What a move in gold yesterday, huh? And the
It
metals.
was I mean impressive in both directions.
Yeah. Yeah. So,
I do want to get to gold. I liked some of the levels that you were just talking about and that you guys were just talking about the resistance butting up against resistance in equities. So I thought we could start and take a look at equities, and there's some things that I'm seeing under the hood that I'm kind of very concerned about. But at the same time, I don't want to fight price that might be trying to continue to grind higher,
yeah.
or maybe higher after a retrace to some of the levels that you talked about.
Okay.
Um, Back in August, when we were here, we were looking for a bounce that could have been a possible wave two, at least a bounce to like 4540s, which we got into the very end of August, and then we did get a move down. Um, some of the things that we track, some of the individual sectors and like the RSP that I want to take a look at, did get what looked like a pretty clear five waves down. Russell, another one of them. This was not quite long enough to be a third of a really good five waves down for wave one. And so wanted to see this be the third, hold here into about where
Yeah.
we got November 3rd, and then get one more low. Instead, we got almost nothing of a retrace and then
No.
pushed to those higher highs. So to count the July top as the top of this B wave or the end of whatever pattern off of the October 22 low, we were relying on that being a WXY. So we didn't have five waves up in here. The problem now is that, similar to this consolidation that was way too low to reliably be a fourth wave, and this being a fifth, although technically it's still valid, this was way too big compared to any consolidation in here or even this in here to reliably be a fourth and this be a fifth. But it's doing what it's going to do, so we have to reevaluate what it's doing and take a look at that. But I am seeing off the low whether this holds as a wave two, and RSP and the Russell are much better at holding a lower
What's
highs.
RSP, Zach?
That's the equal weight S&P,
Oh,
the
okay. All right.
which
Yeah.
which I really, because I wanted to take a look at a few of those Magnificent Seven names, but I
Yeah,
certainly
because
see.
they've been fading. Even with the market strong last week, you had, Google and Meta and
Right.
Netflix rolled over and Amazon's not acting great. Um, some
So this is
rotation
that
going on.
absolutely, this is that equal weight, and a couple of things that I notice here. I mean, you have what counts as a much more clean five waves down from the
Yeah.
July top, and are holding at the 76.4% retrace as three waves up. So even if this was some sort of expanded flat and this is something that is a more bullish low, you still have a clear three waves up, which was probably wave one of maybe an ending diagonal that needs to retrace into that same support region that you were looking at, that's like
Yeah.
4,400, then down to 4,200 after
Yeah.
a possible bounce and then lower. So even if this is something that is the start of more bullish off of this October low as a continuation of something off of last October's low, you still need a pretty decent retrace in order for that to be reliable. That this is pretty clear resistance at the moment that I think, like I see, like you, I see the divergence is building. I see some distribution happening under the hood. That we if we get a clear retrace from that, then that's an opportunity to buy that and go longer. But
Right.
there is a risk that that starts to form in the next initiation move as a wave one of a possible third wave to the downside, even
Wow.
though
Yeah.
the S&P itself is harder to count that way. But I did want to pull up the Russell because I think that is another important. I have to go to the back adjusted one.
Finally having the huge outperformance since that wave one low.
Right, exactly. But you know, it was one of the, so as an index, the Russell had this clear series of lower highs that filled out, and slightly higher lows that filled out as a triangle for this larger B wave that topped back in July. It had a more clear five-wave move to the downside, the same as the equal weight S&P, and this move to the upside, which is right at a 618 retrace, and I think counts as three waves up. You could argue that this is a small third and a fourth and a fifth, but I think it's better as the fourth and the fifth of the C wave that just wanted to extend up to that 618 retrace. So
Do you
you
have
have a
a
possible.
do you have a KRE chart, Zach? Because it makes up the regional banks make up a pretty important part. So you do. You
Yeah,
know, that's exactly what I'm looking for is it's got to finish up around 52, and
the
that would end the correction.
so I think that seems to be what makes the most sense, given that this didn't hold here as a wave
Yeah,
two after
yeah.
five waves down. It looks like it should try and now get more of that measured
There's a
move
gap
up to
there
that.
too. You're not
Oh,
showing the
from back.
gap on your.
Okay.
Yeah, there is a big gap there.
Because I
So
include extended hours. So on the
okay,
extended, it fills in that gap. But yeah, so this kind of move here based on this structure is
yeah,
really not something that I can rely heavily on. It to get
okay,
up there, I think it needs to fade back maybe to 44.50 and
okay,
then try to pop up to 52. So if that's a clear corrective retrace holding
yeah,
those 100-day and 200-day moving averages in the middle
okay,
Bollinger Band, then
all
maybe
right,
it's worth an attempt. But this does not look like a healthy long-term chart,
no,
even if it's not holding as the 1-2 start to a more
yeah.
immediate move to the
Big
downside.
ABC, and then we should get something equal to what happened from the highs in 22 to the
Right,
lows in
absolutely.
23, right?
So there are some bright spots, I think, in the equities. Really like energy. I know you guys were not as excited about oil in the short term, but I think we're pretty constructive on oil, making a lower low that could stretch down towards that 69.70 region on crude futures. But I think that that's just a slight extension of this corrective retrace and then
Okay,
looking for a swing move up. And I think that's reflected really well in a lot of the energy stocks.
okay. XLE, yeah,
XLE and
84.
XOP have,
Yeah.
let me back out up even more
You know,
here.
the XLE doesn't look like a bottoming formation. It just like got hit and it's just moving sideways, but you think it is. All
I
right.
mean, we were looking for a pretty big consolidation from the end of May 2022. We got that initial drop, then we bounced higher than we wanted to see this high hold.
Yeah.
Then we only got a corrective move down and then went up to another high. And then this, as a C wave of that wave four, was incredibly muted. But it does look like five waves down to a truncated low. There's a number of the individual names that we follow in XOP that did make lower lows, like Devon and
Yeah.
APA, and a couple others that did make a lower low here that brought it a little bit more in line with the low for that A wave. So as an expanded running flat, there's some individual names that are more reliable as a bottom to this wave four.
Okay.
But a lot of good starts off of that May, some of them even off of a March or an April low, but off of May and June lows
Yeah.
for that wave four. And you know, this can be five waves up. We're counting it as an A wave as part of a bigger A wave of the wave five, because that's what fits with a lot of the individual names
Okay.
and what we see in XOP. But really good structure in a lot of those energy names, holding pretty clear, nice expanded flat off of the September high. So I don't think we
Yeah.
really need to worry about that alt lower low, or lower higher low as the end of the triangle. I think this is going to hold as that bottom of the wave four.
Forex trader wants to know what the software is.
I
Stockways, it
use
says.
I use Motive Wave
Motive wave.
with DTN IQ feed for my data.
Okay.
And
All right.
because rates are so high, I had to switch over and start using the back adjusted charts for a lot of my futures, which you get the benefit of the continuous chart that all the labels stay there, but they still have to jump because it back adjusts. You have to move everything. But Which is interesting because I was noting, I only recently IQ Feed got uh, a spot gold data feed, and I can only look at it on a daily. I can't zoom in, so I use the futures more. Garrett looks at the spot.
Yeah.
But I did notice that the prices here were a bit different than the spot feeds that he uses. So
Yeah, they
I
look
know there's a couple
pretty
other.
straight across those highs instead of making marginal higher highs on
Right,
B and
exactly.
C. So what do you make out of yesterday's reversal? Is it going to be more of a time correction than we've already had a pretty good price correction? What are you thinking?
Yeah, I mean, I think Garrett and I are still pretty bullish on gold and miners a little bit longer term. Looking for this move off of the 2022 low to be. I know the spot price did make a higher high already, but looking for this to be a larger ending diagonal that takes us up closer to the 2400s and maybe even beyond that, as long as we can hold support in the 1900s, I think
Okay,
is a
so
pretty
could it
key
pull
support
back to
region.
1900?
I think we really should try for one more high up to 2170s in this is the
Okay.
February contract for
Yeah.
gold futures.
Yeah.
2163 to 2173 is the real sweet spot there for the end of that A wave. Then I think we get another pullback that can drop back down into the 1900s. We really want to see it hold 2040s right here and start heading up to that one more high. This structure, while we got pretty close to a 100% measured move, just doesn't look complete, as in terms of 5 waves and a C wave, which we like the subwaves at all of our degrees to match. Even though the larger degrees are going to take precedence and the fibs at the larger degrees often take precedence, we still want to balance those equations. So we'd
Is this
rather not
a
have to.
nice look? So is this a bear market rally in the dollar? We held 61.8 back last week and we're trying to recover.
I'm counting the dollar a little bit differently. All the different subwaves that I was following off of the high in 2022, this looked like a 5 wave move to the downside. So I
Right.
wanted to see this hold here and get more of a corrective retrace up towards 107. But instead we dropped down. But now we have a 5 wave move up. I mean, barely 5 waves up, but off of that July low, that I think is part of is very, very wide consolidation that goes all the way back to February of last year. So I'm seeing the dollar is more bearish. I think this is a 4th wave bounce and we get
Yeah.
one more drop, and that's 5 waves to the downside. So I think you can hang out in this 103 region for a while, under, back over, under, back over. But I think that's going to probably form. I mean, it could. I think one of the interesting things that I look at is when Elliott wave shows you, the underlying structure behind, some other price patterns. And so you can end up forming what looks like a bullish inverse head and shoulders here, filling out this 3, 4, 5 of wave 1 and ABC of wave 2 and maybe a 1, 2 in the start of this 3. And that higher low from this wave 1 could be looked at as something very, very bullish, but it only gets a corrective bounce from there and then fails miserably. So that's kind of the sneaky scenario that I'm looking for, where that would potentially fill out.
All right. Silver, any different look? It didn't make new highs compared to gold. Did that mean
It
anything?
didn't. It's funny. I've been applying an Elliott wave count to the gold to silver ratio chart.
Yeah.
I'm counting, Gary and I are counting silver pretty much the same pattern, although it does slightly allow for 5 waves up off the 2022 low, so it can be an impulsive move. But this is the ratio chart that did complete
Yeah.
5 waves up into the March 2020 high. And this, while we got to a 50% retrace, this looks more like just an initial A wave and a B wave bounce. So looking for more of a C wave down, which should imply that silver would outperform gold. But
Right.
lately it has been noticeably weaker. So not really sure when that outperformance is going to kick in, but it has yet to manifest itself.
How about bonds, Zach? We had that rally from 82 to 93-ish. Are we completing something here and a pullback too?
Um, I'm looking for a little bit more than a pullback. I was more bullish bonds back here when it looked like off of the 2022 low, actually back here, when it looked like we had what could have been a more significant bottom and a more bullish move, a corrective retrace. This should have broken out more there, got a corrective retrace from that. This could have been a wider flat, but then we kind of fell apart. So at this point, this looks like a third and a fourth, and we're in a bigger fifth wave to the downside. With this is just a wave 4 bounce. I look at the 30-year. This is the ZB. I know you guys were looking at the 10-year, but I think it counts almost the same. And those two combine and join forces to make up TLT. This C wave off of 112 can extend a little bit more. I only see 3 waves up so far. It's harder to get 5 waves up in this C wave, so we might need another 4th and a 5th wave, even a little bit higher. But since this counts as a diagonal, the 4th wave can get higher. It doesn't create any issues. Be looking for a pretty significant bounce off of another low, and it doesn't need to get so much lower than the low that we saw back in October. But I would be worried that any corrective move to the downside that looks like it's holding support would be only the first half of a capitulation drop. So get a corrective bounce and then one more massive quick drop to new lows, maybe down holding the 103 to 101 region. And then you can get a really big bounce from there up to the 130s, 140s. But ultimately, I don't know if this is still a 4th wave of something that's going to be more bullish long term, or if we hit a major top in bonds. And this is 5 waves down.
Okay. Anything else you want to touch upon? How about the gold shares? They were slow to get going, but looked to me like GDX broke out over 30.
I do think that we're working on something very constructive long term in the miners. We have this very massive ABC retrace that we're counting as the intermediate degree B wave inside the primary degree wave 3 in a very big diagonal. So this 2020 low was the wave 2. We have an A, B, and we're looking to fill out the C wave to the upside. That should be targeting the 75 region ideally, maybe even all the way up towards 78, 80. But we have a stellar looking 5 waves up as wave 1, a corrective retrace to the 618, and now we're turning up sharply. So far, we only have 3 waves up off that low. So we should get ideally one more pop as in the 3rd, and then a 4th and a 5th wave to fill out this wave 1 of 3, which we're holding decent support for, to get one more push up as the 3rd, and then the 4th and the 5th, and then we'll want to see that wave 2 retrace.
What about the purple 4 there underneath? Is that a possible that we could work lower into that?
Yeah, I was following that a little bit closer in GDXJ. This consolidation here in GDXJ is more pronounced, so it makes this wave 1 look more like an ABC up for wave 1. So this can be A, B, and C wave complete for wave 3. And so we can get a bounce and then more of a C wave down for a deeper wave 4. And then you only get an ABC up for one more high as the wave 1, and then your wave 2. But the same resistance region here in the 33 to 36 region for the top of that wave 1 is as 5 waves up, whether it's 5 waves up finishing off the impulse or a little bit deeper as a 4 and then an ABC up for the 5th, and then your 3 wave retrace back towards the 30 region for the wave 2. And then that should be the point where things just explode and they look like the 2016 lows, where there's like very few pullbacks from there and not many opportunities for new entries.
Okay. I can't think of anything else that you don't do anything in any other commodities, do you? Like the grains, like wheat or anything like
Yeah, we
that?
do.
The
Looking at
wheat
wheat,
looks like it's coming, like it might be finishing or finished.
I think it counts great as being finished with this larger wave two. Would love to see it hold the 764 retrace. So far, it's only a small three waves up off the low. So at a
Okay.
smaller degree, we're counting this as maybe one, two, three, needing a fourth and a fifth wave up to get five waves as a leading diagonal for wave one of this wave one. And we're following that in our metals, miners, and agriculture service. So we follow some of the soft
Okay,
commodities in
cool.
that agriculture. So
We're
yeah,
due
I do
for
like wheat.
$20 wheat in 2027. So bread will loaf of bread will be about $10.
Yeah, I'm not looking forward to some of the broader implications of that. Maybe it's just because of a dollar
A
plummeting.
weak dollar or both.
Right.
Supply and a weak dollar.
And I
How
think
about
that
yeah? Go ahead, Jack.
oh, I think sugar, we filled out five
Yeah,
waves up in this extension.
yeah,
But I think we have a pretty significant top. So we're looking for possibly one more low to have five waves down
yeah,
or more of a corrective bounce. And if we do hold here at 25 and then bounce up to 27, that could be a really good short with fantastic risk reward. You can have a stop at the 28 level, which I know for sugar is kind of wide, but the long-term potential for this to be a more significant top, does make that a tenable trade.
I think at the top they were saying we've run out of sugar. There's no more sugar. Were you hearing
You
that?
know, I don't I do remember hearing a few rumblings about that. I've been avoiding sugar for the last year and a half, added sugar as much as I can,
Yeah,
and I feel great for it. I think that might be a root of a lot of the evils in society, at least health
interesting.
wise.
Okay. How about wrapping it with U.S. dollar yen? Because that's going to have a lot of implications for everything it's correlated to.
I leave those other
Yeah.
currency pairs.
Oh,
I
Davi.
I don't actually have anything worked up on them. I can try and
Okay.
pull it up though, and we can take a look at it together.
All right. So here's some Elliott wave analysis on the fly by Zach Manis.
If I can even
It's no big deal if you can't, buddy. Don't worry about it.
okay.
All right. So best way to follow you and your team?
Um, Check us out on Seeking Alpha. We have a service on their marketplace, Stockwaves, and have some free articles out there. On Twitter, it's at Zach Manis,
I'll put that out there.
ZACMANNES. Or come check out Stockwaves and the mining, metals, miners, and agriculture service on ElliottWaveTrader.net.
Okay, Zach. Really great to talk to you, my trading warrior brother.
You
Nice,
too,
nice.
Dale.
Yeah, some nice looks. Thanks for coming here and sharing your hard work with us today.
My pleasure. Have a great afternoon.
Zach Manis, everybody, check him out. He has a great team, works with some of the best Elliotticians out there. So that's going to be a wrap for me. You could join the team in 20 minutes on the morning edge. And don't just count your pips, count your blessings.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.